Hey, what's going on? It's TerrenceRe, and I'm back at you with another stock market update. Right now, if you're looking at the screen, it'd be nice if I had my screen up. Let's see. Give me just a second, and I'll share my screen, and then we'll go over what's going on the screen. Right there, we go. We got the S&P futures up down 0.5%. We got the Nasdaq futures down about a whole percent, and they're basically leading the way. Um, the Russell is almost 0.75% down, and the Dow futures are relatively flat right now. So we got bonds down. Well, actually, you got the bonds down, and then the notes. If you look right here, they're green on the day. You can see right here. I had a trade on that I put on in the notes somewhere back in here. It went up, then came down, and I took some profit right here on I sold a call spread. So that's why you see I'm thinking about getting in. I'd like to see a pullback up into here. If I could get a pullback up into here to retest this moving average, then it's possible that I would sell another call spread. Um, let's see. If we're looking at we're trading right now on this 16-day as far as the futures contract. I would not trade that one. I don't think. I would rather go out and trade this particular futures contract. Um, so I wouldn't want to trade this one. The one that's the near term. I would rather go further out and go into March and trade that one if I was gonna place a trade. Let's go back to the charts. And what I mainly wanted to talk about today, as we see, we got a down day. The VIX is up, and not a big down day, but the majority of the stocks in the S&P 500 are down. But what I wanted to talk about today is on a down day, yes, you can get short, but ideally, I like to already be short before the down day. Like I want to get short as the market's going up. That's kind of um I know that doesn't sound logical, but ideally you want to sell high, right? You want to sell when something is valued at its peak, and then you want to be buying when it's low. So what we want to talk about on this video is how to short with put spreads. And I placed a put spread yesterday in ticker symbol ON. Um, let's see. And ON, let's see, why would this pop up? Gotta sign back in. Shouldn't do that. It's not like let's log back in. Bear with me. It's asking me to sign back in, even though you guys can't see it. Like it logged me out. Okay. So if we're looking at on semiconductor corp, this popped up on a scan. I got a scan. I have a scanner that I use to scan for like certain trades, and the scan that I have is it is to short stocks. So it's looking like stocks that are at or near 52-week highs. So that would be like a yearly high. So if we're looking at a 1-year chart, that's what we're looking at on a daily. You can see, and I put it on yesterday. So I put it on yesterday in the midst of this big green candle, and you can see the MACD is stretched, and you can see it's overbought. So this is ideally for me the prime candidate to buy put spreads, not necessarily sell a call spread. Like I wouldn't want to sell calls or sell call spreads into this, but I'll buy a put spread because the puts should be cheaper as the market is going up. We have a low IV rank, which means when I have low IV, I would rather buy options than sell them. High IV, you want to sell the options, right? The value has expanded. So in this particular case, we have you should have cheaper options than you would during something like this if you're looking at the chart. And with me buying the put spread, all I did was come into here, and I generally want to be somewhere between, you know, I would say 30 days is ideal, 30 to maybe 45, um, maybe even like 25 to 50, but ideally I want to be right at like 30. And yeah, I think it was 31 yesterday. So I just came in here, and you can see I'm in the money a little bit. I'm up a little bit on the trade. I put it on yesterday. So if you look over here on the right on the TastyWorks platform, you can see my position detail. I paid 97 cents for it, and right now it's worth a buck 13. So I could sell it right now and make $16 on it, right? Um, and I used a put spread, or you may hear someone say a debit spread or an in and out spread. Any one of those things are fine. You can call it a put spread, and I bought the put spread. And when you buy the put spread, you're bearish, right? Because you're buying, in essence, you're buying this a put. So like today, let's say I was doing this today, I could buy the 85 and then sell the 83. And you can see right now today that trade will cost me about 95 bucks. I could come buy, or I could buy the 84, sell the 82. Either one of these, I like to try to get I would rather do, you want to be close, to be honest with you. So sometimes you could say, people would say, the cheaper the better, right? But if it's giving you, or if you got like if you're buying you're buying something and it's really cheap, that means your probabilities are probably a little lower, right? That means there's some skew in the options. There's something going on. Like whenever it looks too good to be true, you need to look at your trade to make sure it makes sense. If I'm doing a $2 wide trade, and when I say $2, look right here in the middle, from 85 to 83, that's a $2 difference, right? So if it's a $2, so that means that the most that can be made or lost on this trade is 200 bucks, period. If ideally you should be paying somewhere between maybe $90 to 105, right? To set up something like a 1-to-1. That's basically giving you like a 50% probability of profit on that trade. Now, you're saying, well, it's a 50-50 shot, because the way it's set up right now, you're looking at it. If I bought the 85, now the trade I have on now currently, you can see I got a 56% probability of profit, and then probability of getting 50% of max profit is like 63%. So by me not trying to get the whole, since I paid 97 bucks, that means it's going to leave me, I can make 103. Instead of me trying to get the full amount, I'll take and sell out of this trade. I already have a GTC order good to cancel for 149. So meaning trying to make 52 bucks. I got a 63% chance of making that, right? And you can see it down here moving as the market moves. That's a high probability. So basically, if I'm doing this trade, 100 times, I should win the majority of the time. And you say, well, you'll lose the other percent of the time, but I'm not gonna. For the most part, the way I manage this, I don't ever lose max profit. And managing the trades and managing your options is how you generally make money in options. Managing the trades, right? Because the math will play out on these. Now you gotta look at it because of the now this is just showing me my probabilities without any type of technical analysis or anything at all. So now if you throw in technicals and you're halfway decent with your technical analysis, then you can maybe even increase your chances even better. Now I'm buying this put spread and getting short when the market's already stretched. So keep that in mind. Like I didn't buy this with, now if we could, let's go out even further. Let's go out 3 years. And let's just look at these charts. Look at this. So I'm buying it here instead of buying it here. Instead of buying it here, instead of buying the put spread at the low, like here, one of these places, I'm buying it here when it's already overbought on the RSI. So I'm putting it, and you looking at the MACD fully stretched out. It would make more sense to get short here than it would be to get short here. Or some people will say, well, why not wait till while it's going down? Because you're already down. First of all, when you do that, you're going to pay more for the trade. Like, you pay up for it when you wait to when you think it's already going down. It costs more around here than it does at these peaks. And so that's the whole. And then when you come to, let's take a look at the analysis tab. We'll go to the analysis tab and we're going to look at it here. Now, I can plot this out. Being is that I want to make, let's just say $52, right? $50. If I'm going to come down here to theoretical price and click on, it says Theo spot price. And then I checked it. Let's put right now it's at 83.68. Let's see. Let's look at let's say we get a $5 move and it goes to 78 today. That's as of today. And it was to go to 78. How much would I make? All I got to do is move down here and click on it. I would make $49 if I got a $5 move today. All right. And you say, well, now let's go back to the table. This is 78 right here. So that's within the expected move. What's my probability of touching 78 in the next 30 days? Not just today. In the next 30 days, I got a 58% chance of touching 78 in the next 30 days. Let's go back to the curve. Because I'm gonna keep doing this. Let's say tomorrow, let's say by Friday, we get to, let's say 77. Let's make it an even 77. All right. See right here, I would make $63. Now, this is theoretical. It could be off by a few bucks. But all I'm doing is showing you, if I can get to 77 by Friday, that's within the expected move. And there's a 51% chance of touching that area in the next 30 days. Not let alone, I'm just talking about by Friday. So we can get a move either way, right? It's no guarantee. But the probabilities are telling me that I got a good shot of it going down here and touching this in the next 30 days. And if it does, then we can see if it does it by Friday, we can see I would make, according to this, $63.05. I'm out of this trade. And then I go look for another one. Now, I'm not even trying to make the 63. I'm perfectly, we go back up to 78. How much would I make? $56. That's right there. That's right there. So basically I just need to get a $5 move. It's at 83.85. So I need a $5.88 move to get down here and take me out of this trade, and I can put another one on. And I got a 57% probability of touching 78. Well, I like those odds with the market already being stretched. And this is a way of putting the math on your side, and using math to help you make your trades. I could have put this on without looking at this chart, to be honest with you. If I know the RSI is it's overbought, or even if you don't look at the chart, you could just come here to the trade tab. Now, like I said, I was prompted to put this trade on by a scan that's looking at certain criteria, like stocks that are near 52-week highs. Um, they don't have any earnings because earnings can throw that off. So it doesn't have any earnings. So, and then scan will give me these stocks. And then I just come in and then I'll look at the chart. And then I looked and seen it was overbought. And I'm like, oh, this is a great um, candidate for me to buy this put spread, a cheap trade. Now, if you want to, you can do as many as you want. Yeah, I only paid $97, looking to make about 50, 53, $54. But you may say, I want more than that. You can do more contracts, 5, 10 contracts, and do it that way. But me, myself, this is just something you can do to stay engaged in the market. It's not real risky. It's easy to manage. Like I said, I already have a good till cancel on that's working. And then I got a limit order set. It's going to sell it. If it goes down to this area and gets to 149, it will automatically take me out of this trade. I don't even have to be looking at it. That's what a GTC stands for. So it'll go ahead and take me out. So, guys, I had put this out on my on the page like a post because I actually did this from my phone. I seen it. The scanner alerted me that I had it. I pulled it up on my phone, looked at it, put the trade in, and then I posted it to the YouTube channel. So, make sure you subscribe. You can see when I put these little trades out. If you want to, and then generally when I do like a trade, I'll come on maybe the next day or something like that and go over it and do a video like I am. So hopefully you guys got something out of this video. The next video I'm gonna be talking about bonds and yields and how we can trade that relationship on the TastyWorks platform very cheaply. Like everything that I'm doing, anybody could do with a small account. Like you ain't gotta have hundreds of thousands of dollars to do these trades, especially the trade that I'm gonna go over in the bonds and the yields. And we'll look at that relationship in my next video because I am watching that and I would like to hopefully I can get a pullback on the 2-year treasury yields because I'm looking to try to get long it. But with that, guys, I'm gonna be out of here. Be safe. Uh, be Trade small. You know what I'm saying? Trade smaller because when you trade small, you don't sweat the losses and you don't get out of trades early. When you trade too big, you can't hold it. You can't sit through drawdown and you end up, burning a trade early. And then you go back and look at it and be like, and then it turn around going your favor. That's because you trading too big. So with that, I'm gonna be out. Peace.